Walmart's another big story. The investment community taking note of their earnings. Big meeting underway here at the big board on the day in which the company did miss. Let's go to Courtney Reagan, who is with CEO Doug McMillon. Morning, Court.
Hi, good morning to you, Carl. That's right. We are just upstairs from where you are at the New York Stock Exchange. Walmart is holding its investor day, and we've grabbed CEO Doug McMillon for a couple minutes during a break. Thank you so much for doing this with us. So you reported your fourth quarter and your full year. A little disappointing compared to what analysts were looking for profit, for earnings, even maybe the U.S. comparable sales, although still strong, I would say, compared to many other retailers. What happened to the fourth quarter?
Yeah, overall, we're pleased with the year, but the fourth quarter wasn't our best. We had a 1.9% comp. We had a strong November all the way through. Cyber Monday was good. Thanksgiving was good. Had a strong January. But there were a few weeks before Christmas where sales in stores were softer than what we'd planned. It's good to see our e-commerce growth continue. We grew 35% for the quarter, so that was terrific. Customers continue to come to Walmart.com, and the e-commerce shift is well underway. But there are some things we did in stores that we think we need to change up for next year. Had a hard time finding a hot toy, had some issues with apparel. Some of those things were self-inflicted.
And that's kind of a good point, because Walmart's grocery has been strong for some time. General merchandise, though, sometimes not as strong. Is Walmart just going to need to lean more into grocery to hit those numbers, or can general merchandise be fixed?
Yeah, general merchandise is still really important to us. It's big and it's growing, and we just had some issues in toys, media, and gaming and apparel. We had strengths in electronics and some of the other hardlines categories. So both in stores and online, GM's still really important to us, and we wanted to grow even faster. And we just have to be able to do both at the same time. We got to have store growth and online growth, food and consumable growth and general merchandise growth to make the mix work. And so that's what we'll get done.
And so you're talking about the full year going forward here. You just were speaking with Chief Financial Officer Brett Biggs about this. And when you look at the earnings, the range is also below Wall Street analysts' expectations. But you've said that coronavirus so far is not having a major impact because your stores in China are open and you've lowered your exposure to sourcing, tariffs, and other reasons. So what's going on with the guidance, and how is coronavirus embedded in there or not?
Well, it's not in our guidance. Let me talk a little bit about our expectations. We think the consumer's economy, the economy for this next year, will be about the same as it is this year. That's our underlying assumption. And growing about 3% top line and 3% operating income, we think is a strong performance, and that's what results in that guidance. As it relates to the coronavirus, it's too difficult to tell at this early stage exactly how to forecast it. So what we shared this morning is, if you go to the priorities that we have, first, it's our associates and customers and safety on the ground in China. We're still operating our stores, almost all of them. In fact, I think all of them are open, but operating in some cases, majority of cases, on reduced hours. And the shift from selling the whole store has pivoted to food and consumables. You could imagine if you're living in China right now, you're focused on fresh food and the staples that you need to have at home. We're also seeing delivery from our stores into apartments and into homes grow at an even faster rate than it was before. And it was almost triple digit last year. So a huge amount of growth as it relates to delivery from our stores. Shipping and product coming out of China into the U.S. and other markets is an issue, but in the U.S., about 2/3 of what we sell is made in the USA. The other third doesn't all come from China, and we've been acting to buy goods that are already here, made in the USA, already in the country, to try and offset some of the things that we might otherwise feel pressure from. So it's too difficult to call right now exactly what will happen in the quarter, but we've said because of what's happening on the ground in China, our Chinese business, not the rest of the world, we do expect to have some impact, but we're not currently putting that into our guidance.
And so Walmart, of course, is a very international business, though a lot of focus on the U.S. business. This quarter, though, you saw some impact from disruption, political unrest in Chile, and you had a number of store issues there. The U.K., Canada continues to be soft. Should you maybe just exit some of these international markets, focus solely on the U.S.?
We have some great businesses outside the United States. The business in Mexico is the first one that comes to mind. But our business in Canada over time has been terrific. It's a really big business and has a really nice return. We've got a tremendous opportunity in India with the investments we made in Flipkart and PhonePe. China, Sam's Club continues to be really strong. A little bit later today, we're going to be walking through the international portfolio. Do we need to be in every market that we're in? No, but we'll make good decisions at the right time as it relates to how the portfolio changes shape. But we shouldn't lump all of our businesses together into one bucket because some of these are really outstanding businesses.
Help us understand what's going on with e-commerce. There seems to be a lot of changes there. For a while, you were acquiring a lot of these smaller businesses. That seems to have stopped, and you've sold off ModCloth. You've seen some executive departures in that area. Jetblack has closed, but now you're looking at operating losses to be flat to maybe lower for next year compared to this year. So what's going on under the surface?
Yeah, let's categorize them. So if you go back to what happened when we acquired Jet, we really found that it served as a tremendous catalyst for Walmart.com. Mark and the team joined. We saw a lower cost to acquire a customer in Walmart. We saw the opportunity to really focus on it and grow it, and so that's what we've done. These other acquisitions that we've made, some of them have been just what we thought they would be. They've increased our assortment, for example, shoes.com, art.com, Hay Needle, which came with Jet when we bought Jet, helped us get category volume, buyers, category specialists, brands that we didn't have before. Over the last couple of years, we've added over 7,500 brands to Walmart.com. Many of those came with those acquisitions. So in that category of assortment acquisitions, we would do those all over again. Really has been beneficial to the company. In some of the other cases, ModCloth would be one of the examples where we had a digitally native vertical brand. That one hasn't worked out like we'd planned. But when you're taking risk and growing, some of these things aren't going to work. And I am okay with that, as long as it's not too significant and a repetitive issue. But net, e-commerce growth, food, plus Walmart.com, plus now with the acquisition that we've made of Flipkart and PhonePay, we've now got a business that this coming year, the year we just started, will be about $50 billion in net sales just in e-commerce. So we've got the right chess pieces. We're learning how to put Omni together, which is really how customers want to shop, and have a lot of strings to play with. So I'm glad we did it.
You've been through a period of a lot of innovation. You mentioned some of them, and some of them are not going to work out. That's sort of the nature of being innovative and entrepreneurial. But has any of that sort of curbed your appetite for pushing that further with the recent closure of Jetblack as an example?
Yeah, let's talk about that. I don't think we handled the conversation around Jetblack as well as we could have. What we wanted to learn was how to do conversational commerce, voice and text, and we learned how to do that. So what's happening is we're taking that function, that capability, and we're going to pivot it to apply to a Walmart market with Walmart products, and we're really excited about doing that. The way we set up the test in Jetblack, you could order anything via text, and we would run all over town buying from any retailer in addition to Walmart. Obviously, that's got a high cost to serve, but we did it to get the data so that we would understand what people were buying and how they would respond to using text and voice. Big check mark on learned that. So this was kind of always part of the plan. We didn't think we were going to scale a big business with this model in Manhattan. And so we look at that as a successful experiment as part of store number 8, and now we pivoted into the Walmart world and take advantage of it.
What about things like in-home delivery, putting the groceries exactly and right into your fridge?
And I'm still super excited about that. You know, we went to Pittsburgh, Vero Beach, and Kansas City last fall, just a few stores in each market, and we have a really high retention rate. And I got to visit the associates in Kansas City recently that do deliveries into the home and make a delivery, and customers love it. I mean, I think there's going to be a time when a lot of Americans are either into their garage or some sort of a box outside their house, and in many cases all the way into the kitchen. They're going to let us serve them and just pay a membership fee, and the items you buy all the time, we'll learn how to just keep you in stock like we do stores. And I think it's going to be a winner.
That's one of those things that some people can't get their head around. Others think it's going to be great. So you'll have to keep us updated on that.
People are skeptical, and then they try it, and then they don't want to stop.
And that's true. Like Uber, getting into cars of strangers we don't know, for example. That's one business that has scaled. There's been a number of executive departures at Walmart, which has been a little different from what we've seen in years past. Folks like yourself spend their entire career at Walmart. We've seen Steve Bratsby's go, and Greg Foran, Ashley Buchanan, Andy Dunn from the digital business. Is sort of the tenure of an executive changing at Walmart? Should we read something into this?
No. And first of all, I'd like to say thank you to them. I mean, just take Greg, for example. He did an incredible job. The reasons that they've left are personal reasons, and there's no common thread related to them. And the people that are now in these roles, I'm super excited about. I mean, John Ferner's a 26-year associate. He's worked all over the company. He's going to do a great job taking the foundation that Greg helped build and make it move faster and become even more innovative. You're going to see Scott McCall, who became our chief merchant. He's a long-term Walmart associate, and get to know him. Dakona Smith got promoted to run operations. He's been with the company for almost 30 years. We've got a lot of depth, and then we have a lot of officers. And there'll always be a story to tell about officer turnover at Walmart because we have so many.
And before we let you go, I know you got a meeting to get back to here just down the hall. State of the U.S. consumer, changing, the same, steady?
Yeah, pretty much the same. You know, low unemployment, low fuel prices, no inflation, all those things are helpful. We think this next year looks a lot like last year.